Have you ever been staring at your chart when suddenly price just jumps? It leaves this huge empty space and you're left wondering, what on earth just happened and what do I do now? Well, today, we're going to unlock the mystery of that void and show you how to turn it into a powerful, high-probability trading setup.
Welcome to AI Explains ICT. In this video, we are diving deep into a concept from Core Content, Month 4, Episode 9. And trust me, you are definitely going to want to grab something to take notes with, because this idea can seriously change how you see the charts.
So, let's start with that mystery, that empty space on your chart. It's a gap, right? A sudden jump where price moves from one level to another almost instantly. This usually happens because of some high-impact news event or right at a session open.
So picture this. You're watching the market, everything's moving along, and then bam, a huge gap opens up. For a lot of traders, the first reaction is either confusion or maybe even a little bit of panic. But what does it really mean? More importantly for us, what's our next move? Well, ICT gives us a very specific name for this.
See, in the world of ICT, this isn't just some random gap. It has a precise name, and it's called the vacuum block. And just understanding this name is really the first step to knowing how to trade it.
So what exactly is a vacuum block? Think of it as a gap that's created by a really intense, high-volatility event. The key concept here is that it creates a vacuum of liquidity. It's like a literal hole in the market's fabric where absolutely zero transactions took place. None. And you can see it perfectly right here, that big empty space between the close of that one candle and the open of the next one, that is the vacuum block. It's a void of information. But, and this is the cool part, this void has a hidden structure, and that's what we're going to break down next. So, the big question is, how do we analyze something that, well, isn't there? This is where the ICT framework is so brilliant. It gives us a systematic way to look at this empty space and anticipate what price is very likely to do next.
It feels like a trick question, doesn't it? How can you possibly find clues in a range where no trading happened at all? The secret is to stop seeing it as just empty space and start seeing it as a very unique, analyzable price range.
And here's how we do it. We're going to treat that entire void as if it were one giant virtual candlestick. So we give it a high, we give it a low, and most importantly, we give it a mean threshold, that critical 50% level right in the middle. Now, all of a sudden, we have a defined structure we can actually work with.
Okay, so once the vacuum block forms, ICT teaches us that the market has a very, very high probability of wanting to return and fill it in. And this usually happens in one of two ways, either a partial fill or a full fill.
Let's break these down. On one side, you have the partial fill. This is when price dips into the gap but finds support inside it, usually at an order block. This actually shows a lot of underlying strength. On the other side, you have the full fill. This is when price trades all the way back to close the gap completely. ICT calls this event a perfect delivery of price.
So here's scenario number 1 in action. You can see price trades back down into that void, but look at where it stops and reverses. It's reacting perfectly to that last down candle before the initial jump. That's a bullish order block acting as a hidden level of support.
So, what's the result? A small piece of that original gap is left open. And this leftover portion, well, it gets reclassified. It's now what we would call a fair value gap, which is a new reference point the market might want to come back to way in the future. This whole thing shows us there's a strong willingness for price to keep going higher.
But now let's talk about the second and often the higher probability scenario. Here, price just blows right past any internal structure and drives all the way back down, completely filling the entire void. This action perfectly balances the market. This is that perfect delivery of price we were talking about.
Okay, so we get the concept of a full fill, but how do we turn this knowledge into an actual, actionable trade? This is where the theory becomes a really powerful and practical strategy.
And this quote from ICT really gets to the absolute heart of the strategy. After a full fill has occurred, the market has completely balanced out that liquidity vacuum. The imbalance is gone. So logically, there's no reason for price to come back down into that area again. And that is the foundation of our trade idea. So here's the game plan, step by step. First, you spot the vacuum block. Easy enough. Step 2, this is the hardest part. You have to be patient. You wait for price to trade all the way back down and completely fill that gap. Third, you watch for a bullish reaction right at that level to confirm that it's holding. And finally, you anticipate a strong rally away from that now balanced price range.
And this is what success looks like. The gap is completely filled, price finds support right there at the bottom of the old void, and then it just launches higher. Because that liquidity vacuum has been balanced, price is now free to go seek liquidity back in the original direction of the gap.
All right, let's wrap this all up with the key rules you absolutely need to remember. You can think of this as your personal cheat sheet for trading the vacuum block. Let's recap. First, a vacuum block is just a liquidity void. The market almost always wants to come back and fill this void. A partial fill is a sign of strength, and it leaves behind a fair value gap. But a full fill, that's the perfect delivery that balances the books. And here's the golden rule. After that full fill, price has no business coming back down there. Oh, and keep in mind, the time of day can definitely influence how and when these gaps get filled.
So I'll leave you with this question to think about. Now that you've been trained to see these invisible structures on the chart, how is that going to change the way you read price and anticipate where it's going to go next? If this video helped you finally see the void, we would really appreciate it if you could hit that like button and subscribe to the channel for more deep dives into ICT's amazing concepts.
And of course, if you have any questions at all, just drop them in the comments section below. A real human is standing by and we'll get back to you.
That's all for this one. Until next time, everyone, safe trading.